Hello, hi. Yeah, just an update for the market last week and what's coming up this week. As I mentioned before in my previous episodes about the glimpse of hope in the market, I believe this momentum will continue. And I think this will be the first time in a long time whereby commodity prices or commodity stocks will go up, and at the same time Nasdaq, the tech stocks, especially the profitable ones as well, will be going up in tandem. Usually they are inverse with each other, meaning if commodity prices goes up, that's like a key indication that inflation, the fear of inflation increases. And when inflation increases, Nasdaq, generally the stocks will go down because of the fear in the price going up, and then the valuation metrics to calculate Nasdaq is based on discounted cash flow, which is related to the hike in the interest rates, which means that if commodity prices goes up, and that will lead to high inflation, um, and then inflation will lead the Fed to hike the interest rates. But in this case, it's slightly different. The high in the inflation is, I just want to show you a couple of articles. Commodity prices are generally very good for economy, but it will be particularly good for USA this time round because US has been, killed by other, like especially China with their low production costs and all that to produce industry. Lithium to rare earth and all that, right? Other than Australia, and then you got the Russia as well. The war that's happening. So, and most of the miners, because of environmental issue, and the cost of production just doesn't make sense, to produce. They have gone bankrupt many years ago. So now this sustained high commodity prices is actually good for the US to kickstart back their lithium mines and all that. So the next question is this: one theory suggests that commodity prices respond quickly to general economic shocks such as increase in demand. Okay. However, this time round, the high in the commodity prices is because of the war. It's not because of the increase in demand. So I want to lead you to this another article, which is a producer price index, which is called the PPI. A smaller gain in the US producer price is hint of a cooler inflation. This happened last week. Um, Actually, yeah, a few weeks ago. So prices paid to US producer decelerate in December, and actually in January as well. I don't have the article with me. Also drop. So it shows that generally people, especially in terms of consumer goods. I'm not talking about consumer services. I believe that services will still be on the rise because of the COVID change in people's behavior. But if you're talking about consumer goods, like for example, what you buy on Shopee or what you buy from you will spend less. You will allocate more for holidays and travel and all that. Um, so that will also cool in the price of goods which are produced by, could be handphones, and all that. So I believe, other than electric vehicle that people would want to go into, because of the high uh, petrol and gas prices. So this time round, commodity price goes up. It's not because of the increase in demand. So actually, there's a drop. So the inflation rate is 7.5. It came from a 7% December. So the next question people will be predicting is, when will be the inflection point for the inflation? My view is actually 7.5 is pretty high. We are definitely have very little upside left. If it goes up, probably 8 point something, and maybe by May, if the war they come to a settlement, each take half of the Ukraine, and or they agree to have the country as neutral, change of head. Don't have that neo-Nazi Israeli president on the comedian on board. So this could all be ending, and it looks like Russia's army is weakening, low morale, and so those speculation that it's going to be World War III and all that looks like it may not happen, because US is actually fighting Russia as well at the moment, with all the sanctions, crippling financially, cripple them tech, cripple their space and all that. So it's actually yeah, very interesting. So I believe this time around, just give watch out, just look out. This is a good time to enter both commodities and tech. Maybe not in the consumer discretionary goods, unless you're talking about those companies that sells grocers, or do grocery shops, and companies that produce fertilizers and all that, right? They would be they will go up. But if I believe Apple would be a bit quieter this time around, and because people, if they have 3,000, they might not want to spend on an iPhone, like during COVID, or a MacBook. They might want to spend to go for a holiday in Vietnam, that kind of thing, and delay their spending on Apple. So the moving to services is one thing as well, and the part of the fact that people are moving to services actually helps to reduce inflation, because the most wasteful thing is you produce things, and if you travel, you're actually gaining experience. The place is there. There are not much carbon footprint you give out, by traveling to another place, other than, of course, the airlines and the cruises, which in my earlier episode I said these services were bound to boom. So do go into that as well: travel, services, commodities, and tech stocks. And all these three will go hand in hand. These are the main three things that you should target for the next, from March, April till May, I think. Yeah. So yes, thanks a lot. Please click a like to my channel.